Cathie Wood, a self-described Tesla bull, is undaunted in her faith in the electric car maker. Wood is a tech-focused investor known for her optimistic views in emerging industries, and she is also the CEO of Ark Investment Management, a company that has had impressive returns in recent years thanks to successful bets on companies like Tesla and Square. So today, let's take a look at what she thinks about Tesla's future, which could help you with your investment strategy. Cathie Wood, a prominent investor, recently acquired several Tesla shares again. She was able to do this because of the stock's recent decline, which brought to its lowest level in almost 2 years. And Wood is seen to have made several purchases of Tesla stock since October. In fact, a total of 74,862 shares of electric car manufacturer were purchased by Wood through 3 exchange-traded funds. The purchase price was estimated at $11.7 million based on the day's closing price of $456.80 as reported in a daily transaction report delivered by email on December 14th. Ark's acquisition followed Elon Musk, CEO of Tesla, selling $3.6 billion worth of share over 3 days ending on December 14th. Ark purchased a total of 61,537 shares of Tesla for the ARKK Ark Innovation Fund, 10,066 for the ARKQ Ark Autonomous Technology and Robotics ETF, and 3,259 for the ARKW Ark Next Generation Internet ETF. Tesla is Ark's third largest holding behind Zoom and Exact Sciences Corporation. Wood's deep buying frenzy comes during a challenge month and year for Tesla's concern rise among investors around Musk's Twitter antics. Furthermore, Tesla's stock has fallen more than 19% in December and approximately 55% year-to-date. Wood, a lifelong Tesla bull who has described Musk as Ark's Renaissance hero, is unyielding in her belief. Most car companies won't be able to keep up or beat Tesla's combination unless they intend to lose money on their cars. According to Cathie Wood, that is crucial for both performance and range. In response to a question on where she sees Tesla in 5 years, Wood noted that the company has a clear advantage over other automakers. She noted that if one studies automobiles, not by brand but by capacity and performance combination, Tesla is the greatest selection among them. She also noted that the most prominent automobile manufacturer like Volkswagen and BMW have done marvels in the previous few years. It is merely that Tesla is much ahead of them in terms of range and power combo. Wood claimed that most other vehicle manufacturers will not be able to stay up with or approach Tesla's capabilities unless they want to lose money on their automobiles. Wood underlined that that's really essential from performance point of view and range point of view. Wood was asked her opinion on huge firms trying to compete with Tesla in creating electric vehicles, and she stated they are failing horribly. She argues that customers will not be as loyal to other automakers' brand if they migrate from gas to electric power and compare vehicle based on their specifications. They may still be attracted by brand names alone. She claims that they might now have access to a quality electric vehicle until Tesla releases its own. Cathie Wood reaffirmed her confidence that gasoline-powered vehicles will become outdated over the next 5 to 10 years in an interview with Yahoo Finance. She believes the conventional car sector needs to find a means to transition to electric cars. Midway through October, a second executive at Ark shared his confidence in the industry leader. When asked why Ark Invest has such a favorable outlook on Tesla, CFA Tasha Keeney appeared on CNBC's Squawk Box to discuss the matter. Keeney cautioned that people should not get too excited about the current state of the electric car business because it's still in its infancy. However, Tesla is recognized as a front-runner in the electric car and autonomous industry. The CEO and creator of Ark recently told Yahoo Finance that she had no worries about Musk's management of Tesla. Meanwhile, investors had been increasingly concerned that Tesla CEO Elon Musk is spending too much time on Twitter and too little time running the electric vehicle company. According to Yahoo Finance, Wood said Elon's primary responsibility at Tesla is to steer the company toward developing an autonomous taxi platform. Her prediction is that this will occur in the year 2024. She also taking Musk's word that it will happen this year. Now, before we continue, I'd like to thank you for getting this far. And if you want to know more about what Cathie Wood thinks Tesla is currently focusing on, then make sure to watch this next part. Ark's revised open-source Tesla model places significant weight on Tesla's prospective robo-taxi business line. By 2026, it is projected to supply 60% of the value and over 50% of EBITDA, or earnings before interest, taxes, depreciation, and amortization. They project that by 2026, electric cars would account for 57% of the company's income throughout the simulated set, but at far lower margins than the robo-taxi revenue. Since Ark now has more faith in Tesla's capacity to accomplish full self-driving, they need to be brought out to speed on how the robo-taxi company fits into the plan. Despite its previous claims, Tesla has been doubted to ever introduce autonomous ride-hailing. However, they have now changed their minds in light of Tesla's recent successes and expect the launch to occur in 2026, 4 years later than Musk had predicted. It's also speculated that by 2024, Tesla will have taken autonomous ride-hail to the commercial stage. Robo-taxis has the potential to revolutionize the transportation industry, yet in 9% of their model scenarios, Tesla fails to bring the product to market within the projected 5-year timeline. Modeled financial outcomes for Tesla are sensitive to the year of launch only if robo-taxis goes into commercial operation within the predicted window. The improved capital efficiency of Tesla is another benefit of Ark Invest's revised approach. As the Model 3 production ramped up in 2017, Tesla's capital expenditure per extra capacity unit decreased from roughly $84,000 to around $7,700. Tesla's extra unit of capacity in 2025 was predicted to cost between $6,000 and $8,000. And assuming that Tesla would spend $2,000 and $7,000 on each additional capacity unit in 2026, the company's capital efficiency is substantially better than projected. Ark predicts that Tesla will reach $4,600 per share in 2026. Based on the improvements made to the most up-to-date version of the model, both the bear and bull scenarios estimate that the Tesla share price in 2026 might be somewhere around $2,958. If this occurs, regular citizens in the United States would be priced out of buying Tesla stock, and only large financial institutions can afford shares. However, keep in mind that the August stock split was not considered while developing this model. The Ark Invest also said that Tesla's introduction of the robo-taxi is to be anticipated to be a turning point for the firm. If Tesla can get robo-taxis off the ground by 2026, the average of 1 million hypothetical fares is what we may anticipate paying. The year in which Tesla ultimately released robo-taxis significantly impacted the accuracy of the previous simulations. Most of Ark's lowest share price scenarios involved Tesla launching a human-driven taxi hail service but not a robo-taxi system. In certain other realities, Tesla does not introduce either service. The firm has not made any official announcement about introducing human-driven ride-hail, but Ark has previously described the strategic and tactical benefits of doing so. Before Tesla's completely autonomous service is released, ride-hailing powered by humans might become a lucrative source of recurring revenue. Ark anticipates a gradual transfer of Tesla's human drive-hail cars to the autonomous ride-hail network if Tesla introduces a human-driven ride-hail service. If Tesla cannot solve for complete autonomy and deliver a robo-taxi service within the next 5 years, it may still introduce a ride-hail vehicle piloted by humans. However, in many of Ark's scenarios with a greater share prices, Tesla will roll out its robo-taxi network within the next several years. Ark Invest believes that their Tesla model is cautious in terms of methodology, even though it is set to our predictions for 2026. In 2026, they expect Tesla shares to trade like a mature firm rather than a fast-growing startup. Analysts and investors who see potential in electric vehicles are certain that Tesla will maintain its market dominance. They also anticipate Tesla's dominance in the solar panel and battery storage industries. On the other side, bearish analysts and investors worry that the firm won't meet or perhaps fall short of investors' expectations. They fear it will become generic like every other production firm rather than unique and groundbreaking. Investors with bearish views see the corporation as overpriced, vulnerable to competition, and subsidized too heavily. However, estimates for Tesla's stock price range widely. According to Nasdaq, the average 12-month price estimate for Tesla is $250, which is more than double than the company's present worth of $110 per share. However, this year, $436 is the most optimistic price target for Tesla shares. On the other hand, the most pessimistic analyst covering Tesla predicts a decline in share price to $85 within a year. The investing community is split on Tesla's prospect in the foreseeable future, but Cathie Wood, for one, sees the recent drop as a fantastic opportunity to stock up on Tesla shares. So, do you agree with Cathie Wood and Ark Invest with their prediction about Tesla? Let me know in the comment section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know about how to start investing in Tesla, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.